All right. Thank you, Jeremy and German American State Bank, for having me on. My name is Greg McBride. I'm a broker at Allendale Incorporated. Been with the company here for about 14 years. I've been a broker for the last 7. So as we go in, I'm going to just try and kind of gloss over some of the highlights or the most important things as we go into spring this year. A lot of craziness in these markets and a lot of higher prices that we've never seen at this time of the year before. So definitely need to buckle up because there is some hopefully some good times ahead of us, but it doesn't mean that we can take our eyes off of what it actually needs to be done, which is marketing. We'll start off at our conference in January. We had Drew Lerner do a forecast for us, and this is what he told us back in January. Looking at the spring, doesn't look like we're going to have too big of a problem with rains. We should have near to maybe a slightly below normal precipitation across most of the Corn Belt. Obviously, the Western Belt and Plains is going to be the biggest issue, but when we transition and we start to look towards summer, this is where the biggest concern for drought and dryness comes in. Is we expand that drought and that dryness from last year and move further into the Corn Belt, the entire Western Corn Belt under fire here, and maybe some dryness issues creeping all the way into in Indiana, and temperatures above normal as well. So that will continue to push that drying phase or that drier bias as we keep the temperatures up. This is the most recent information from NOAA. So as you look over here, you've got the spring outlook. As we start spring, we are on the warmer tick. Plus, we are looking at some drier potential. Now, as you look at the three-month forecast, you can see that heat does tend to intensify. So this is above normal. This isn't just seasonal temperatures. This is above normal temperatures down in Texas, all the way into to southern Nebraska. But then you do see the above normal temperatures for pretty much all of the United States. Below normal precipitation for that 3-month window as well for western Iowa, western Missouri, and all parts west towards the coast. Looking out to the summer outlook, and we see that this drier period does continue to push. So that forecast that Drew showed us is going to hold at this point. This is going to be a major concern as we go forward. Doesn't necessarily mean that we will have a 2012 type drought. It just means the potential is there for dryness. And we all know that we don't necessarily have to have that drought for the funds to take hold and really jump on the markets and take them higher. Obviously, with warmer temperatures like we were talking about, that will continue to exacerbate some of that dryness in the soil. So hopefully what we see here with some of the precipitation getting into, especially our area here in Illinois, hopefully that soil moisture kind of extends out a little bit better for us as we go into summer. So talking about the funds a little bit, we're looking at corn right now, and we've seen the funds, the managed money come in and continue to buy at a pretty frantic pace. They slowed down last year in mid-year, and then they started right back up in late fall and have continued to buy it. Well, as we saw, we put a low in here in September, kind of chopped around and didn't really go anywhere until the beans took off. And then once the beans took off, the corn followed. And then right about here, we saw what happened when the Ukraine Russia war started, and we just went and continued to fly higher. Funds are very much behind this rally that we're seeing, because we are seeing some low engagement right now with all the movement that we saw once this war did start. We are starting to see that the only people that are really involved heavily on a daily basis are the funds moving money in and out of their own positions. There's not as much farmer engagement, not as much commercial engagement either. So we look at world corn production and why this is a big deal. Obviously the United States is the biggest out there as far as its production. But as we start to move down the list, China being a huge producer, but that's all kept internal. Brazil with a big production this year, it'll actually be somewhere around 110 million tons, not this 115 that we showed here back in January. The EU is a sizable producer. Argentina also a sizable producer and exporter, but the Ukraine here being the fourth largest exporter of corn in the world. This is where that situation that they have right now, where they have about the same growing cycle as the United States, where they're going to be planting corn in mid to late April. This is where this becomes a major issue if they are down, say 30%, or they get nothing planted. So this is something we're going to continue to watch, and something that could lead to some higher prices as we move on. Obviously, Mexico, a fairly sizable producer, but with the amount of usage that they have, they rely heavily on the United States for imports. Once again, here as top exporters, the Ukraine as a number 4 exporter in the world for corn. This is a big hit if they are out of the game for a while. It will mean that we should see increased production or increased exports from the United States. Right now is not typically the time where we would be low, but we have kind of dropped off a little bit from where we thought we would be. We actually thought as we were moving into the new year that we would see a lot of purchases by China, but that has not happened. We've been getting good buys from other countries, Mexico being our number 1, but we've seen some new purchases coming in from countries like Spain, which would normally be from Ukraine or sourced from the Ukraine. But with their situation, ports being shut down, the rail system not being able to handle that heavy of a switchover from the seaports, this is what we're looking at for potential for the U.S. to pick up some extra demand here as we move forward. We look at Brazil, obviously a large corn exporter. Their cycle doesn't really start to kick up until about June or July. That's when their second crop corn is harvested and ready for shipment. So we'll see that continue to stay low. This is where I say we have an opportunity right now. And then when we look at Argentina, they have decent exports going from now until about September, but they're not the big exporter that we are. And with their situation where they're adding taxes, or they have currency issues, this is one of those things where we probably will continue to see the lion's share of those exports come across. Again, looking specifically at the Ukraine and how much they actually produce versus how much they export, it is a major portion of their production that gets exported. So as we move into 2022 here, I would expect that we will continue to see these numbers dwindle a little bit, maybe take 20-30% off of their production. You could it probably won't be a 1-for-1 move on the export reduction, but it'll be close, and that'll be something to watch for keeping us elevated at this point. So go in and we'll talk a little bit here about the balance sheets for the U.S. and what we're looking at as far as the world as well. And this is as of March 9th. We saw that U.S. ending stocks were lowered by 100 million bushels to 1.44 billion. That is still very much below or I guess above where we should be trading at this point. We're actually trading well above where we should be at this point. If you look over here, roughly at 1.4, we should be in the 550, 575 area. But with what we're seeing, obviously old crop corn is trading at that 750 to 780 level. So there is still that potential that we could see 8 on the old crop, and there is still potential that once we move on into the to the world side of things later on this year, and we look at our own backyard, we could be seeing a 7 or maybe even 8 in front of our new crop prices as well. So looking at the world side of things, we continue to see the world's ending stocks lower. This will be something to watch because we know that those bushels out of the Ukraine are not going anywhere. They're not destroyed. They're still there. Eventually, they will be able to ship those. They're trying to get those on rails right now so that they can get them moved to maybe Romania and then get onto a port somewhere else there. But eventually that stuff will get shipped. So it could be a right now bullish input for the United States, and maybe later on take away a little bit as we go into the fall. So as we look here specifically at soybeans, I'm going to keep moving forward here. Soybean production here in the United States expected to be at 125 million tons. We are this number was back from January, so this 145.8 for Brazil has come down significantly. We know they've got a shortfall from the drought that they had. Argentina as well, down to about 44 to 45 million tons. Brazil dropped so far has dropped about 20 million tons, down to about a 125. Now last year was very similar. They saw that those numbers at 120 to 125. And by the time it was all said and done, once their production phase was over, harvest was completed, they were at about 138 million tons. That was just updated a couple of months ago to 137 million tons. So just like it is here in the United States, it's very difficult to completely know what we're looking at as far as what's in the field until those combines get rolling, or until the scale tickets get measured here, because soybeans is kind of an anomaly. Sometimes it looks bad, and then we end up always saying or having some sort of a comment like, well, I guess it was better than we thought. So as we look at South American production, as I mentioned, this number will come down just a little bit. Don't have anything for their that we'll be too worried about at this point. They will still be shipping soybeans. We're not gonna gain the lion's share of exports from Brazil because they're down 15 or 20 million bushels. If you look at where they're at, I mean, this still puts them in line with where they were at just a few years ago. So we're not looking at any major failure at this point. We're just pulling off of a record crop from last year and the year before, and we're still back in line with where we were at 3-4 years ago. So as we look at the top exporters, obviously Brazil number 1, US number 2, Argentina number 3. This is going to continue to stay this way. You may see a little bit, and we've already seen some of this happen with the new crop purchases, say from China specifically, or unknown destinations, where new crop purchases for the US are being done right now. Those will probably not ship until later on in the year, and I'm talking like late in the year, like December, maybe even January of 23 and into early February. And the reason they're buying these right now is there is still that concern about that dryness here in the US. So they want to make sure that they've got their needs met, and they make sure that they get those deliveries later on in the year when they need those, rather than waiting all the way until they get to January or February to see if Brazil actually has a crop next year, especially since they know they're going to be short on their crop this year. Now, we don't expect this to change much. The annual imports for China, they are going to get about 100 million tons. We have heard them say that they are going to continue to increase their own production. They're going to increase their soybean production. They're going to increase their corn production, and they are going to decrease what they use over there because they are not feeding as many animals. They just are trying to find alternatives to these higher price corn and soybean bushels. But at this point, they still will be a major buyer and a major importer. So we'll go back and we'll talk about the Ukraine, because it does hit the world veg oil, and it does affect the soybean market, as we've seen over the last couple of years here. Palm oil based mainly out of Malaysia or Indonesia has had some production issues. They've had typhoons that have come in. They've had other problems with export taxes. They're halting exports, and that's driving the price of palm oil up. It also then helps to pull the price of soybean oil or sunflower seed oil or palm kernel or even canola higher. And what that does for us as we see these numbers go, the Ukraine, in what most people don't realize, is the number one exporter of sunflower seed oil in the world. So as you can see, they've overtaken us as far as the soybean oil sector here. Nobody really pales in comparison to palm at this point, but it is a major factor that if you see your sunflower seed oil exports drop off substantially, maybe that gives us an opportunity for higher exports of soybean oil. Gives us a reason to continue to crush at a higher level. It also gives us a chance to see higher prices for soybeans along the way. And I'll go back one spot here and look at this. One of the things to remember is that sunflower seed oil or sunflower seed growing season is not until later on in the year. It's not immediately right now. So we're looking at maybe the June, July, August timeframe for that. So if a deal is worked out in the Ukraine war, that is something that we could be watching for as a potential to maybe ease these markets or ease the tensions in these markets a little bit. We'll go ahead and look at the overall balance sheet from what we saw from the USDA for soybeans here, and you can see, obviously, as we look at the ending stocks being at 285 million bushels. That would imply that we're somewhere in the neighborhood of $12.40, maybe closer to about $12.60, $12.70. So we're obviously trading way above that. We've got a 17 in front of beans today, and this is March 24th, and we closed, I think, right at $17.75. So one of the things that you have to remember is that just because your actual pricing meets up with one of these stocks levels doesn't necessarily mean that's where we have to be. There's a lot of factors that can come into play with this, and some of it is we overpriced or we overdid things on the drought in South America. We've got the war that's going on now. Even though we've seen over the course of this war, soybeans have really relatively worked sideways, there is still a lot of premium built into that. Plus, the funds have decided they want to be owners. You also have a lot of inflation conversation in these markets because everything is higher priced right now. So not just you go to the grocery store and your steaks are higher priced, or you're looking at trying to buy a car and that's going to be a higher priced. Even for a used car, it's going to be higher priced. That's the way it is in our own commodity markets at this point, which means obviously your inputs have gone up substantially. Everybody knows about that, and that will not go away as we start to calm these markets down. So as these markets start to calm down, we're going to be in a situation like we were in 2013, 14, 15, where we had high inputs because of the drought in 2012. And even though the prices came back down for corn and soybeans, we did not see those input prices fall off nearly as quick. So we still will be dealing with these high input costs as we move into the next maybe 2, 3, 4 years. So I will share this. Here's my information. You can call me or text me 815-578-6165. You can also email me at gmcbride@allendale-inc.com. One of the things I wanted to just briefly talk about, I do enjoy being able to talk to my producers. And one of the things that I talk to them a lot about is marketing. And it's not necessarily that just because we think the market's going to go up It's that you still have to keep your focus on the idea that you have to have a marketing plan. Now, those numbers may come up. You may start talking about making some sales, or maybe you've already made some sales, but you could be looking at making some sales at the $6.50 or $7 mark for corn. You can make some sales at $15 or $15.50 for soybeans, but you have to continue to make sales. And what we'll be looking at here at Allendale is, as we start to move through the spring, we're going to start to look at ways to get your to protect the price. Now, that could be as simple as buying a put, or it could be as complicated as buying a put and selling a call to keep yourself as close to the money as possible. Or if you're simply looking at knowing where your hedge is at and knowing making a true hedge, you can just sell the futures. So there are a lot of options. I didn't want to go into specifics right now, because with where we're at in the cycle of planting, or where we're at in the cycle of this war that's going on, there's a lot of unknowns out there. So we don't necessarily know exactly how high this market can go, but there will be an opportunity, say in May, June, or July, to get that done. So if you have any questions, please feel free. Give me a call, 815-578-6165. Send me an email, gmcbride@allendale-inc.com. Thank you.